This video explains marital property division on an after-tax basis. The goal of this report is to help the parties arrive at a division that would be fair after taxes. This is a unique report. You will not find it anywhere other than family law software. To get to this report, click the Negotiate tab and then select Property After Tax. The first section of this report shows you the key tax rates that are used in the calculation. The second section has detailed calculations of the percent paid in tax for each item. The third section gives the result, and the fourth section gives you the line item detail for each item. The key calculation here is the percent paid in tax. This is the percent of the total value of the item that will be paid in tax when the item is converted to cash. For assets such as real estate or securities, this means when the item is sold. For assets such as defined benefit pensions and IRA and 401k plans, this means when the asset is distributed. For assets that will be sold, such as real estate and securities, this number is different than the party's marginal tax rate and depends on the tax basis of the item. The higher the basis, the lower the percent paid in tax. For retirement accounts, such as defined benefit pensions, IRAs, and 401k plans, the percent paid in tax is the party's marginal tax rate in the year that the asset is distributed. You can see the detailed explanation of the percent paid in tax by clicking this link. And what you will see is that for each item, there is a detailed explanation of how the percent paid in tax is calculated. You can then scroll down and see how that percent in tax affects the calculation of the after-tax value of each item. Once we know the percent that would be paid in tax when the item is cashed out, calculating the after-tax value is easy. For example, if the percent paid in tax is 17%, then the after-tax value is simply the other 87% of the party's ownership interest in the item. There are a lot of assumptions and guesswork involved here, and they are all spelled out in the section on the tax rates that we are using and the calculation of percent paid in tax. Please look carefully at each of these assumptions and calculations. If you think that any of the assumptions is not the best assumption that could be made, you can use the approach that we are taking to make your own calculation of the percent paid in tax and then easily override our calculation of the percent paid in tax, and the after-tax equity will update instantly. This gives you an easy and powerful way to calculate what the property division for the parties should be in order to equalize division on an after-tax basis. And that's our video on after-tax division of property in family law software. Thanks for watching.